Welcome to the Explainer. So you've hit a huge financial milestone, your first 1 lakh rupees. That's awesome. But it also brings up a pretty big question, right? What on earth do you do with it?
You know, that number, 1 lakh rupees, it's so much more than just money. I want you to think of it like a seed. It's just pure potential, sitting there waiting for you to decide what it's going to grow into.
And really, that's what this is all about. What story is this money going to tell? Is it a story of quiet, steady growth, smart investing? Or is it going to be a story of creation, of taking a risk and building something from scratch?
Okay, to help you figure all that out, we've broken this down into 6 parts. We'll kick things off with the big question, then we'll dive deep into both paths and wrap it all up by helping you choose your own adventure.
All right, let's get right into it. Think of it this way. You're standing at a crossroads. In one direction, you can put your money to work for you, just letting it grow on its own. And in the other, you work with your money to build something, from the ground up.
So let's talk about path number 1, becoming an investor. Now, this journey, it doesn't just start with buying some stocks or a mutual fund. Nope, it actually starts with a really basic question you got to ask yourself first.
And it all comes down to this. What are your goals? Seriously, this is everything. Your timeline, how soon you need the money, defines your entire strategy. I mean, are you saving for a new phone in a year? Then you need safety, and you need to get that cash easily. A down payment for a car in, say, 4 years? That's a mix of growth and safety. And retirement? Well, that's way down the road, so you can take on a bit more risk for, hopefully, much higher returns.
A really great way to think about this is to imagine you have 4 empty buckets to fill with that 1 lakh. Bucket number 1, and this is the most important one, is your emergency fund. This is money you can grab in a pinch, no questions asked. Bucket 2 is for safe investments, steady, reliable returns. Bucket 3 is for growth. This is for building real long-term wealth. And the last one, that's your high-risk bucket. Totally optional, but it's for a small slice of your cash if you're feeling a little adventurous.
Okay, so that's the theory. But what does this actually look like when you've got a lakh of rupees sitting in your account? Let's get super practical and break down what a plan could look like.
So check this out. What you're seeing here is a really balanced approach. See how half of your money is in the safe stuff, the liquid funds and FDs? That's your foundation. It's solid. That means the other half is free to go after some real growth, with a big chunk in equities and then that small optional slice for something a bit riskier. It's the perfect mix of being careful and being ambitious.
Let's put some actual numbers to this. 30 grand goes straight into a liquid fund. This is your emergency cash. It's non-negotiable. You can get it anytime. Next, 20,000 in a fixed deposit. Super safe, guaranteed returns. Now, the biggest piece of the pie, 40,000 goes into an equity index fund. This is cool because you're basically buying a tiny piece of the entire stock market, so you don't have to worry about picking the right stock. And that last 10,000, well, you can think of that as your fun money or your learning money, maybe for some gold or a few stocks, but only, and I mean only, if you're okay with the risk.
And look, this isn't just some boring checklist. This is about a total mindset shift. You're going from just saving money to actually investing with a real plan. That emergency fund, that's peace of mind. Using SIPs, that just automates good habits so you don't even have to think about it. Diversifying, that's just a smart way of not putting all your eggs in one basket. And thinking long-term, well, that's the difference between gambling and actually building wealth. Okay, so that's the path of the investor. Pretty clear, right? Now let's completely switch gears and talk about path number 2. This one builds a totally different kind of value, because in this story, you are the engine of growth.
And this quote really gets to the heart of why someone would choose to build a business. Look, passive investing might get you, 10, 12% a year, which is great. But a successful business, wow, the potential there is for so much more. But you see that big if in there? If done wisely. That's the catch. It's a heck of a lot more risk, and it's going to take a ton of effort.
So you might be thinking, what kind of business can I actually start with just 1 lakh? Well, it's probably more than you think. We're not talking about building the next Google here. We're talking about starting something small, lean, maybe local, and most importantly, profitable.
Okay, the key thing to notice on this table is that you don't need the whole lakh to get started, not even close. A freelancing business, you could be up and running for 20 or 30,000 rupees. A cloud kitchen from your own home, maybe less than 50,000. And the best part, in every single one of these scenarios, you've got a nice chunk of cash left over as a reserve. And trust me,
That is absolutely critical. Let's talk about what I like to call the digital hustle. If you've got a skill, maybe you're a great writer, a whiz at design, or you just get social media, then your biggest investment isn't money. It's your time and your brain. The cash you need is pretty minimal, just for some tools, which means your profit margins can be just huge. Or maybe you're more of a foodpreneur. The really beautiful thing about a cloud kitchen or a food cart is the cash flow. You're not waiting around for months to see a return on your investment. You can literally make money on day one. You start small, you test your menu out, and you grow as people start loving your food. It's awesome.
Now this founder's checklist, it's a completely different game. The mindset here is all about survival and smart growth. You never go all in. You always start small and see if people actually want what you're selling. That cash reserve we talked about, it's not a safety net, it's your lifeline. You are obsessed with cash flow because that's what keeps the business alive. And in the beginning, every single rupee you make goes right back into the business. That's the fuel for growth.
All right, we've explored both paths, the steady, patient road of the investor and the wild, challenging trail of the founder. So, the big question remains, how do you choose which adventure is right for you?
At the end of the day, it all boils down to this simple comparison. Investing, lower risk, way less effort, and you're aiming for good, steady returns over the long haul. Founding a business, it's the complete opposite. It's high risk, it's going to take over your life, but the potential reward could be absolutely massive. And look, there's no right or wrong answer here. There's only the answer that's right for you.
So that brings us to the final question, and it's a personal one. Are you a planter or are you a builder? Think about it. Do you want to plant that seed, take care of it, and just patiently watch it grow into something strong over many, many years? Or are you a builder? Do you want to get your hands dirty, take all the raw materials, and actually build something new from the ground up, piece by piece? Only you can answer that.